The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's very, very cold here in North Carolina, in my opinion, for normal temperatures in this state. And I don't know, I'm actually talking to the guys down at TFNN, and they're talking about the 20s today down there, which is blowing my mind, actually. And I'm not really up to speed on what this does or doesn't do to the orange crop. I know that this is kind of harvest season down there. I used to live in Sarasota, Florida, and the blood oranges come in and early in the fall first, and then the rest of the types of different types of oranges come in over the winter. And I don't know if the harvest is over. I'm really not adept at anymore what is going on with the orange situation. I know they're not blossoming right now, but you might want to watch Andy Hecht and ask him some questions about that. There may be some plays on that right now. I'm not extremely familiar with what's going on in the orange futures business. I don't even look at it actually most of the time. It's a little bit of a niche market in my opinion, but Andy's probably got some great information. You might want to catch his show about that. He's got some great fundamental news most of the time on situations like that. I'm actually looking at the S&P 500 right now. Just kind of wanted to follow up on that. We had talked yesterday, just to get right into it, about an inflection point down here around 2013, 2014. It kind of hit that and then backed off down into, for a little bit of a day trade down into, it's actually about an 8-point move down after we started talking about it. But, again, this is what stops are for. This is, again, what we talked about as a short-term situation, letting the 240s regulate it, and as we get up into the fair auction on here, you kind of got to say to yourself, was that a day trade, and what am I actually trying to do in the long run? And in the long run, basically, our breadth had been a little bit mixed up here. If you follow our show, our breadth was negative on the daily and positive on the weekly, and it's still that way. But the stocks, we've had some movement overnight, and this is more than likely going to get positive again. So let me just kind of go through the dissertation of what we were talking about yesterday. 2025 unfair highs on the 240, and on the daily, we have that let's just call it 2027 rounded off situation. And overnight, again, going into the overnight session here, there's after the close, let me just go into the 60s here so you can see this pretty much. There's kind of the close situation, and we were closing sub 2025, 2027, but at or around 7 o'clock last night Eastern time, somewhere between 6 and 8. I don't know how eSignal's got these actually gauged on the exchange times. I think this is Chicago time actually. So I guess around 8 o'clock in that hour, we spiked up, blew through those 20, 25, 27 areas, and that's what stops are for. I was actually looking at that as a very ripe opportunity based on the dailies, kind of still being negative from yesterday, but getting very close to positive, taking a shot there. Now we've got to look at this more than likely let me get this in the right time frame here. As stocks open this morning, and considering that the futures are up, and my screen is all over the place, I apologize, and the futures are up 18. That's pretty significant. And as we look at that, we're probably going to see this flip possibly to positive here. And why? Because, as the stocks open, these are built from the internals. So unfortunately, for short players, this move may be temporarily over, as it has been very often in the last 4 or 5 years. These pullbacks become shorter and shorter. We were considering looking at And this is the daily again. Now you've got to be looking at 2025, 2027 as support now, because the breadth now is more than likely going to be positive across the board. Excuse me. And now it's going to be okay to be long, not okay to be short on the long term, the intermediate, the 240s and the 60s. And that's just the way this is bouncing. And this may be a function also of what's going on with the oil, excuse me, the oil market. People, again, I mean, we're up $1 or $2, and people are thinking that, oil's found a bottom off of a one-day little reversal here. We talked yesterday morning about oil, and this is, again, what people may be hanging on to. You can look at this. I mean, just kind of step back and look at this. Again, got an orange bar here. New profile may be appearing. And I'm going to talk a lot about the scanner today. A little bit later, somebody called on yesterday's show at the very end asking about AT&T and then not really understanding possibly how to use this thing to its fullest potential. And as I look at this, and I'm just going to get rid of everything, and I'm going to pull up our futures. And as I look at WTI crude oil, I'm see that orange bar there, that orange cell, yellow cell. That's indicating that we've got a new demand area coming on. I'm going to kind of get into that, because you see these things pop up. You can do these, analysis is if that's a word, based on doing some filters. And one of these filters would be finding new box attempting to appear areas. So crude oil may be having, by the end of the day, or even sometime during the day, a new profile appearing, which, excuse me, as they appear on e-signal, they lock in. They're not going to move around. They're going to be kind of concreted in for eternity, basically, until a new profile appears. And that's in itself is going to be somewhat of a possibility of a market turn, or at least a resting period for crude oil in general. Now we're going to have to see where this new profile appears. If it appears above this area, which again will be reflected in the scanner itself, then that's actually relatively bearish for crude oil. So we're going to have to wait and see what happens there. We're going to go back to it if we can, if anything happens before we get off the show today. But again, that being said, and going back to the S&Ps now, and as traders, we've got to be able to switch, kind of mindsets and switch gears here. I was personally hoping for this thing to come down into the 68.72 area on the S&Ps, based on that breadth on the intermediate daily being still negative. But we had quite a bit of a reversal yesterday, and as we use that breadth and use that breadth of the internals based and in conjunction with the inflection points on the index itself, that's kind of how we want to use that thing. We've got to use these Maginot lines and fences, if you will, that are in force and in play on these indices, on the futures specifically, to try to pick battles. And as we breach some of these, and as that breadth turns now from negative to positive, we've got to be willing to stop ourselves out. And we always talk about, and we've caught some really, really good moves in the S&Ps playing this same situation over time. If you've been watching this show, this time we've got a little chopped up, and it's, lose a little, lose a little, lose a little, make a lot. I'd say that quite often. But, this 2027 area, we tried to pick a battle coming down into it, got stopped out, used it as, former support, now resistance, caught a little bit of a move on the downside. And, well, I don't know what you consider a little bit of a move, but, some of the downdraft that happened. And we were trying to, play the odds and play the game, turn the rents the same way. And, lo and behold, now we've got price action and breadth pointing north, and we've got to take that for what it's worth. And, crude oil may rise a little bit. That may make the market happy. You've got some external factors going on. So that's the take on the major market index that everybody looks at. I'm going to take a look at something that's just unbelievable. I actually thought the dollar, I didn't talk about shorting this, but I thought the dollar would kind of relax a little bit here possibly, and this is just not happening. Again, okay to be long, not okay to be short. There are zero reasons to short this thing. If you want to buy this thing, you've got to again, kind of hang on to some inflection points here. Here's our 240 situation. Again, this is reflected in our scanner also, but what do you do if you're long? You let these 240s, in my opinion, regulate you out of this long trade. And as it's, stood lately since 88, since we had that breakout on our weekly and daily before, we just haven't had any reasons to even get out of the long trade. Excuse me. And what does that do? That affects the other currencies. And I go through these most days, but I go through them because, again, these are instruments in play. And sometimes you can make your whole year by going to an instrument that's in play. And this thing is just, with the problems in Europe. And, people are looking at this French thing now as a lot of people don't, they kind of pass through the parts of the newspaper when it comes to, other countries' infrastructure as far as, the population and what's going on with that particular article or whatever on that, foreign country they may not give a crap about. But, this kind of brings out the fact that I did not know that there were Sharia courts in France where the French police don't even go into those areas. It's almost like a separate country within a country. I actually didn't even know that. And, people kind of getting that on their radar screen. It's like, that's pretty damning for the euro, just from a fundamental standpoint, that a lot of folks out there now are starting to see, man, Europe might be a little more screwed up than they thought it was. And you've got, let's call a spade, whatever. You've got Islamic internal populations that don't even abide by the societal laws of some of these European countries. And, that population is growing and growing, and obviously the problems from that situation are growing and growing also. So, this is not good news for the euro. There's so much bad fundamental standpoints you can take on the euro, and we've talked about not staying away from the short trade, and it's okay to be short, not okay to be long on these currencies. Here's the pound. I mean, the pound, London, Great Britain has got a massive population. They've imported these workers, and it's some of those things are coming to roost, and it's pretty much strictly by a charter by some of these religions, and these are not settling moments for some of these countries right now, and therefore some of these currencies are getting devalued even more. As the dollar rises, these things have an inverse relationship to them most of the time. We'll be right back, and we'll get to the scanner a little bit later.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We talked a little bit about crude oil and S&P specifically. Before, I'm going to take a look at the notes here. I've got a new profile attempting to appear here on the notes, 128.05. You know, stock market looks like it's kind of broken through some resistance and some breaths have turned positive. So, again, on the situation with the 10-year and the 30-year, we're looking for possibly new supply to enter here and a new profile to appear, and that's also indicated on the scanner. Where did my daily chart go today? Okay, I'm gonna have to restart eSignal because I lost my daily chart. All right, that's not good. Let me see here. Let me try to get that back. Well, I'll switch time frames on this one. All right, so as we look at the situation on the 10-year, what do we do now? Have that new profile attempting to appear on the daily, and we've got support right now at 127.24, which is also given within the scanner those inflection points. And we're going to get into the scanner after this particular next break. Pretty hardcore, so hang around if you want to get some information on that, maybe learn how to use it a little bit better to your advantage. As we look at the DAX, I want to pull that up. Excuse me. Go into our daily here. this is a situation on the DAX. Obviously, we found support the other day on this, and we're actually putting Brett then on the DAX pretty soon, which is going to be cool. 90 in the scanner. 9750 is going to be a little bit of a target on the DAX right now, and we're going to have to pay attention to the S&Ps, considering that these things have been, trading to some degree in tandem. So 9750 50 is going to be the target on the DAX in the interim right now, and we don't have to reach that. But again, I think that's going to be more than likely a decent situation to pay attention to. If the S&Ps pull back, we're going to have to kind of watch that also. But that's not something that I'm continuously watching as the DAX. It's a very volatile product, and I actually think we've got much more leverage trading the S&Ps. We got to take a look at gold really quick before we go to this break. 1200 still the daily unfair highs here that we're going to, I'm personally looking at it as a leverage point with stops down below and trying to let this thing breathe and possibly make a move. I love the way this thing's acting relative to the dollar, continuing to get valued higher. And hopefully, possibly, if we do have the dollar pullback ever, maybe gold will have a chance to really move north. I'm not looking at this as something to short. We did, as you look at the weekly on this, we did get into that and come off again at that 1219 area. We reached a high this week already of 1223, and just didn't, want to actually breach that or go any higher. We're definitely not closing above there, but that's going to be extremely damning for the shorts if that does happen above 1219. Okay, and we got about a minute and a half left here. We're going to try to cram in a couple other things. I'll tell you a trade that we put on personally on crude oil. I didn't mention this when we were talking about, kind of the enough's enough situation. As we talked about, some of our strategies actually have a monetary target, as in like a 5.5, 6% move in a certain amount of time. We actually did sell some call in the money calls yesterday on this, for a little bit more aggressive situation. And they actually had $2 premium on top of the intrinsic value still in a very short move up. So actually that was something I forgot to mention earlier. Okay, all right, let's take one more look at something I wanted to take a look at before we head to this next break in 30 seconds here. I've got to take a look at the yen really quick, because this is kind of slowed down relative to the dollar move. And we talked a lot about waiting patiently for support on this product all the way up since 101.33. That was about 2,000 pips ago, and that was the case the other day. But right now, what do? I still think this is kind of the long trade of all times, and I think stops can just be oriented below 118.20 still on the end. If some people had sent me some emails about this, and here's the situation on the 240s. We're going to take a look at the scanner when we come back, folks. We'll see you in a little bit.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I'm going to take a look at some of the things we talked about yesterday before we get to the scanner. ExxonMobil, let's see here. We talked about this 89.66 area combined with 89.49, that little DMZ down there from the weeklies and dailies. Talked about crude oil possibly being enough, and a couple of these stocks like ExxonMobil and a couple of those we mentioned. I'm going to go through those. Now we're trading 91.55. So we talked about a couple of buck bounce off of these 89.5 areas, and we've kind of gotten that pre-market. We're sitting around 91.5. So, again, it's kind of been a little bit of a pop trade, kind of risk reward, probably risk about 50 cents on something like that, like we talked about. And, may have some follow through since the S&P's considering, this situation, maybe giving some help here. Again, these things seem to kind of go from gloom and doom that the world's ending, and then the skies are blue again so quickly. And that's just amazing how these, things change this quickly this day and time. A couple other stocks that we talked about. I'm just going to look at Schlumberger. This was another one that, we saw down here. We're trading 82.43 right now, and, this 80.68 area. So, we looked at this. Let's see here. we looked at this area down here as something we were going to try to, look at as a leverage point, considering that the relative strength trade, oil goes lower, these stocks don't go lower, and it's a little bit of a hint that there may be some things changing in these particular stocks. Occidental Petroleum, another one that we looked at. Again, we talked about this one being, probably, something that, that showed itself closing, was sitting below profiles before yesterday, and we talked about this not being possibly the best candidate, but again, we've got a leverage point down here. Stock didn't act well yesterday, so even in the face of crude oil kind of rising a little bit, so this is something, I'm not a big fan of sticking with. It just didn't act that well. Halliburton, obviously, kind of caught a bid here, has reached some short-term targets, but this thing may actually move a lot higher based on this thing kind of being able to hang in here, this 37.84 that we reached yesterday. Let's see, lows were 37.84 to 38.07, very close to it. Actually, this thing may move actually a lot higher if oil just catches a bid at all, so you're going to have to keep an eye on oil. We're trading 39.79 right now, so that is above those unfair highs on that particular daily for Halliburton. Let me see here. Grab some of these other stocks that we took a look at. So the instruments. No, gotta wait on that. Okay, so somebody called yesterday and they asked about AT&T, and what I'm gonna do is I'm gonna pull up in the scanner, we'll pull up the S&P 500. And the first thing that I do, I'm just going to kind of walk through the process of, let's specifically look at AT&T first. Go down to AT&T, and there it is. And the person that was calling yesterday, I think her name was Daisy, was asking about, where's major support on this? So I'm going to pull up the landscape chart. And I'm going to see that major support around 32.48. That's the major support on this thing. And obviously, we've kind of climbed back above dailies here at 33.08. And, these numbers are pretty close together. So you've got a kind of a collection area down here. That's major support on AT&T. And if you look at this stock, this is the level of the market here. And these are all the inflection points just painted for you, these 240s and 60s. Somebody like that who's asking that question just needs to pretty much block that out. Those really don't have a lot of relevance in what's going on here and when it comes to major support for AT&T. And as you look at this stock, it's kind of a, kind of always been a dividend play. This is not this is not like Google or, Yahoo back in the day. It's a stock that really has, to some degree, underperformed. But I'm going to pull up our weekly here. But when you consider underperforming, you've got to factor in dividends and things like that. But over time, it's basically been in a range. I don't have to tell you this. I know you can see this between 32 and 39 since 2012. So again, stock price factors in to some degree dividend plays and things like that. But major support, I guess she's willing to accumulate more because she's trading the range possibly. And you basically got a collection area. We've kind of been as low this week already. Let's see, where's the low here? 32.73. And we actually started looking at this yesterday, kind of caved into that collection area. And if you're looking at this as, I'm going to be happy with the dividends, I'm going to trade the range, I'm going to hang on to this stock, I might accumulate more. This is the good news. The good news is that you've got a chance to look at this from a collection area kind of standpoint based on, we're within a fair auction, which means a balanced area in AT&T on the long term. And the bottom of that balanced area is 32.48 rounded off, if you can see that. I'm just going to pull up the landscape chart again. Let's see here. Okay. So that 32.48 sitting down here. And the good news is if you're going to play that type of game, accumulate more dollar cost average in, whatever you call it. I hate that term, dollar cost. It's a nice way of saying doubling down, but if you can place and orient stops around in major inflection points like that, which in my opinion this provides, then okay, I got stopped out of some of the stock that I just bought, or maybe all of it. I don't know if that's, you got to kind of, if you're trading long-term things, you might, and you've got a financial advisor, you might want to kind of talk about the ins and outs, or the ups and downs, or the pros and cons of getting out of position totally. There's tax implications. There's all kinds of things going on there. But you can also look at these situations as, maybe I want to buy insurance. Maybe I want to buy some puts, or maybe this is not the area you probably want to sell some calls in. Calls are to be sold when the stock possibly, in my opinion, will be kind of overreaching itself, or getting into major inflection points like 35.74. But as we look at this, there's two ways. You've got an accumulation area down here that you actually got into yesterday. You started to get into, and I would consider that DMZ between 32.27, 32.48, and 33.08. So you kind of got your toe in the water in that situation yesterday. And in a long-term trade, you want to give yourself a little bit of room, a chance to, not wait for the tick to be hit to the price level, to the tick there. You've kind of got a collection area here on AT&T, but again, like we talked about, buying puts may be appropriate when we get into that situation down there, as a hedge against hanging on to these things, or just placing stops, either on the whole position or the new part of the position. And if you get stopped out and get back into that kind of collection area again, it may be time to start picking it up. But there's also kind of a, not that this particular stock has had a lot of market relevance lately, but you've got a situation here where the long term, if you're looking at a long-term trade, the long-term S&P view is relatively positive here, and we're probably going to get this flip over as the market opens today. Hold on 2 seconds. Okay, I had a little bit of a technical glitch there. So again, the long-term market view right now is positive, and that's something else that's, as far as digging in for the long term, helping that situation on AT&T. So again, those are the inflection points to pay attention to on AT&T, and obviously we've had a little bit of a pullback on AT&T as the market's pulled back, and you can orient stops around there, and I think I've said that about 20 times, so I'll stop now. But one of the things that I look at as far as, one of the things that I look at as far as utilizing the scanner is I love to use it as a relative strength trading engine, if you will. And what does that mean? That means that as we are getting into support or resistance on the stock market itself, and I'm going to go back to the S&Ps, and and I'm just going to pull up our weeklies here. As we had breadth turn south, and I'm just going to pick an area that we've had breadth turn south. We've had breadth turn south. We've actually had breadth hang in there on the long side on our long-term breadth here recently. This has never really wavered lately. It's always been positive. We had a chance to buy the dip here the other day as that long-term weekly breadth was positive. Now, if the weekly had been negative, I'd have probably wanted to opt out on selling S&P, or on going long S&Ps down at 1968. But considering that breadth stayed positive on the long term, the very long term, now the daily, remember, was just to kind of do a little history lesson here, the daily was negative starting on the 9th, 10th area. All right, so that gave us an intermediate situation that we could hopefully take advantage of, selling the bottom of our profiles on our daily on the S&P. How does that relate to the stock market and the scanner? I'm getting ready to tell you. So as we look at that, buying the dip on, you know, the long-term inflection points, again, the 1968 area the other day, what that really allowed me to do was to try to go in here and say, you know what are the stocks that have really been hanging in there? And I'm in the S&P 500 right now. So I would go in there and I was looking around going, all right, well, what's sitting at the top of the profiles that can pop, or what's actually clean and clear of profiles? And I'm going to look at weeklies and dailies above the box, and it's going to show matching results. And I know we just had a little bit of a bounce here, but now we're above inflection points, and we're going to just kind of look at things that are looking relatively ripe and have stayed relatively strong as this market had pulled back a little bit recently. So as I look at this, got quite a few candidates here. And I'm looking, I'm just going to pull up one of them, Monster Beverage Corp, MNST. I'm going to pull that up. Actually, I'm going to pull up the landscape chart first. Okay. All right, so here we go. And I'm going to look how this has acted in the face of MNST. Obviously, it's kind of okay. So 113.50. I think this stock's had some news lately. 113.50's major support on this. It's stayed a relatively strong stock, especially staying within profiles and not really giving you any reasons on a long-term basis to short this. And every time it's found support or breakouts, it's actually kind of held true. Here's the situation on the daily. So, as this thing had come in and these inflection points were provided recently, we kind of got above these daily profiles. We've breached weeklies, and this 112.55 going into our scanner again. This 112.55, as it's plainly stated right there, was kind of, now this 112.55, 113.50 is going to be support on this. And as this thing had real time been breaching, you've actually, I don't know if you guys see these kind of colored bars here. These are showing first bar above as it's happening real time. So, for instance, I'll pick one out, RTN. Let's go to that one. RTN. Okay, so again, this is showing first bar breach on RTN, on Raytheon. So now you've kind of gotten back above 107.31. The S&Ps, and I'm going to go to our weekly here, we're sitting right above 107.16. So as I go into my landscape view, I'm just going to, and this actually paints it a lot quicker. Where's Raytheon? There we go. I'm going to pull this up and see that, I'm kind of clean and clear, and I've got a really good DMZ here, 107.16, 107.31, to leverage against and play stops against. The market's going to rattle around here a little bit, probably above 2027, and possibly move higher now. And this is something you can kind of gauge as a dig-in area on the long side on Raytheon. And we'll talk about that a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Was looking at on the scanner, actually looking at Raytheon before, determined that was probably something, a strong stock in a strong market has had to pull back to some inflection points and may provide a decent trading opportunity. Alternatively speaking, was looking at National Oilwell. I just, let's just see what's not cooperating, which, if you feel like the market could rise a little bit here, we may get a pullback, former resistance, now support on the S&Ps, that we may get a pullback into that 2027 area today. Looks like we're overshooting ourselves a little bit, maybe too much, too fast here again. And that may be a buy point, considering that these, long-term breadths are positive, and the intermediate may flip over as soon as the market opens. Some of these stocks get open. But I was looking at, what's really just not cooperating. And, again, the oil stocks are generally, the numero uno candidates here. So I was looking at National Oil. These are sitting on the precipice of possibly falling apart here. But we've got, kind of oil rising. If you think oil is going to rise, this may provide a little bit of a bounce situation here. So let's look at, the two down here that are not necessarily well below profiles. These are actually sitting on kind of a DMZ situation between weeklies and dailies, National OL. So it kind of puts this on my radar screen. National OL, here's the weekly. Again, hasn't made new lows recently with oil, but sitting at inflection points here, but hasn't really, even yesterday with the market rallying and oil trying to get off the bottom, this thing's just not really cooperating. So again, to me, this means that you could probably find better candidates in the oil sector. This is something, I would stay away from. You could get a quick bounce here. But again, if you're going to play this game with this, you know where to put stops oriented below this DMZ down here. And that's basically what it does for me. But again, oil may head lower. You got to make sure you put your stops in on something like that. But I'm going to take a look at something else. These are things that, this is probably, in my opinion, the better way to look at this. I'm going to pull up, let me just clear this sorting. I'm going to go into, this is still our S&P 500 up. I'm going to go in and say, what is new box appearing here? And as I wait for that to pull up, these are stocks that could be, and we don't have this separated, these are things to look at, like new supply or new demand is attempting to appear. So I'm going to look at Apple. Everybody knows Apple, and right now, this is the situation on Apple. And what it's saying here is, I've got new daily supply or demand appearing possibly in the 60-minute. I'm going to ignore that because that's kind of a day trading timely thing. But I'm going to pull up Apple, and I'm going to look at the chart and see kind of where it's come from and where it's been, or where it possibly might be going. AAPL. So as you can see here, we have come down below and coming back up, and we may have a new profile appearing here. So, what does this mean right now? Pre-market, we're trading 1901. That's right up into that daily inflection point here, and a possibility of a new profile appearing. So Apple, again, this is sold off a little bit here, but we're coming back up into a major inflection point. And again, if you think the market's going to head higher, I think the market could actually, kind of retrace a little bit back into that 2027 area day. So you might want to just sit tight with this, considering that the market may drag this back down if you think the market's going to come off and just kind of settle back just a tad, and then kind of reassess Apple a little bit later. Steve Rhodes is up next, guys. Pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.